I'm David Scott. I'm a UK Export Finance Advisor. I work in London. I've got a London focus. There are 24 of us around the UK, and we work with UKTI, but very much with a focus on finance and how to help businesses. Just to tell you the presentation, I'm going to give you, the next one is a video about a company that we've worked with. Happens to be architecture, but the story is very similar, I think, in terms of the benefits we can bring. Then I'll tell you a little bit about the products, but I'll be giving you some real examples of companies that have used us and hopefully how they've got benefit out of working with us. So bear with me. Hopefully the case studies will help to demonstrate more effectively the support we can give. So on to the video.
Hello, my name's Heather Wells and I'm the Group Finance Director here at BDP. We're a design practice comprising architects, engineers and urbanists. We were founded over 50 years ago in the northwest of England. We now have 6 studios throughout the UK and 5 studios overseas. About 5 years ago, we made a strategic decision to expand our international presence and profile. We found, especially in the Middle East, there was a requirement for performance guarantees that required cash and bank funding. At that time, the UK banks were finding it difficult to support export finance. We specifically approached UK export finance to assist our development plans and to encourage growth faster than otherwise would have been possible. After initial positive discussion in relation to Q8, we returned with a larger project on the basis that UK Export Finance knew more about us, knew more about our work, and had successfully been willing to support a services contract. If UK Export Finance hadn't existed, we would not have gone for a number of opportunities in the Middle East. 30% of our income last year came from outside the UK. Of this, 20% was from the rest of the world and only 10% from Europe. Without UK Export Finance, our cash restrictions would have limited us to one opportunity at a time. With the benefit of external support, we've been able to take numerous opportunities forward and therefore grow faster. Our creative skills and experience are highly sought overseas. Services are an important part of the UK export industry, and it is good to see UK Export Finance supporting services as well as goods. I would encourage everyone who is looking to grow their export business or begin to export to contact UK Export Finance and see what support is available from them.
BDP are a classic example of the kind of company we work with. They got to a point in their growth, if you like, where they needed to access money that the bank wasn't happy to give them at that stage. We were able to support them and they've moved on, and as she said, they've now got offices in about half a dozen different locations. And those are the kind of companies that we enjoy working with because obviously they get a benefit from us, but more particularly they're bringing in some income into the UK, which is what we're all about. Just tell you a little bit about who we are. We are the Export Credit Guarantee Department for the UK. We are part of the Treasury. The money that we support businesses with is actually paid out of the UK taxpayers. The money hopefully you're all paying as taxpayers, and therefore we're trying to give back to benefit you. But the ultimate objective obviously is to bring money back into the UK, increase employment and get more taxes in to fund more businesses. We were actually established back in 1919 at the end of the First World War, when basically the economy was not that different to the way it is now in terms of the banks weren't very comfortable to lend money to businesses. And we came into place simply because we provide bank guarantees. So if you go to the bank for a loan and the bank's thinking, okay, I like the idea, but I'm not comfortable to lend you that kind of money, they can come to us for a guarantee to support your business. But our focus is always exports, nothing else at this stage. So we were established in 1919. What happened was, effectively, come 1990, our role wasn't needed because the banks were prepared to lend to anybody, the insurers were prepared to insure anybody, and in fact we were virtually shut down. In 2010 we had 10 customers. There's Rolls-Royce, British Aerospace, Airbus, mega contracts. But because of the collapse of the economy, we came back into being. And as Trade Finance and Insurance Group, or Insurance Solutions Group, which is what we are, our focus is on small to medium-sized businesses. So literally anything up to probably 50 million, but we tend to work at the bottom end. So it's supporting those businesses to get growing and get into exports. All sectors, all sizes, and the most important thing is we work with the banks. So you can't come to us directly, you have to go to your bank, and the bank then comes to us if they believe it's a worthwhile idea. And the last sentence there, we complement, we don't compete. As government, we can't compete with the private sector. So particularly in the case of insurance, if you're looking to provide products overseas, you go to the private insurers. If they're prepared to support you, we don't get involved. But there's an awful lot of markets, once you're outside EU, OECD, that in private market won't go to. We will, in fact, look at it very seriously, and a lot of business that we do is for those markets. So just, again, quick recap, anything really from 10,000 to 2.3 billion, which maybe not tomorrow, but you never know, might be there some stage. The most important thing to remember is there must be at least 20% UK content in anything that we support. So whether it's IP, whether it's profit margin, but ideally we want to work with companies that in the perfect world would make everything in the UK from everything made in, created in the UK. But of course, you've got to live in the real world. We have to import from all over the world, so hence 20%. 5 years ago, it was 80%, so be grateful it's down to 20%. And it's very much, you have to be registered in the UK, and your customer has to be an overseas customer. That's how we get involved. 5 products, bond support, which you may or may not get involved in, but I'll give you an example. Working capital, very much for exports, and letter of credit guarantee scheme. That is a very minor part of our job, because if you use letters of credit, most banks are happy to work in that situation. It's only when you're working in a very difficult market that they may not be prepared to work with that letter of credit, in which case they can call us in and we can help out. And finally, insurance policies, just to give people that comfort. So if you're trading in a difficult market or a challenging market, you want comfort that in 6 months you'll get paid. And that's hopefully what we can give you, because some markets, obviously, you might never get paid, but other markets, it takes longer. The bond support scheme, are people comfortable with the fact that perhaps in a situation where you're supplying a company and you ask for an advance payment, so something to actually get the money going, but quite often, companies today, when you ask for an advance payment, they want a guarantee in return. So they give you £20,000 and they want a guarantee from you that says that or from your bank, that says you'll pay £20,000 back. Which means the only way the bank is going to give you that is out of your cash. So in fact, you're no better off. We can step into that situation, and we can guarantee up to 80%. And that's, when Heather was talking earlier on, that's exactly what we do in that situation with the architects. Again, the most important thing is that it's got to be 20% UK content. An example, company here, Micron Sprayers, 90% of their business is export. And they produce those tiny little hand sprays. They got a contract, actually quite large, 1.2 million, to supply overseas to the Cameroon. They needed working capital, and they couldn't get hold of it. But most importantly, they got a 40% advance payment from their customer, which at 1.2 million, that's £480,000. That's not inconsiderable, but the Cameroon buyer asked for exactly the same in return. So they had to try and find that. And they went to the bank. The bank was supportive, but not really terribly comfortable with it. They came to us and we provided that 80% guarantee. So instead of having to put down the £480,000, they got away with 120,000, I think it was. No, 96,000, which is 20% of the 480, and we guaranteed the rest. So that gave them the freedom to be able to have that working capital to produce those machines to go to the Cameroon. Next product that we produce is the working capital, and this is very much related to specific contracts. It will be changing, hopefully, but at this point in time, it's all about having a specific contract to supply a specific company in a specific country, and that's where we get involved. As before, we will guarantee up to 80% of the risk, and the big thing here is it's particularly useful, as in the case of the video, where you've got a company that's growing and you're getting a lot more orders in, so we can actually come in and help fund that working capital that you need as you grow to buy more goods in to sell on. 20% UK content, as always. The big thing here is, whilst we can guarantee 80% of the facility, if you have this contract, the banks are not allowed to give you more than 75% of that contract value, which means at the end of the day, we can guarantee up to 60%. But the great advantage is it can make an enormous difference in terms of your ability to fulfill contracts. The maximum term for our service there is 2 years. That's maximum. But, we work on projects at 3 months. That's all people need, is something to get them through those 3 months to deliver the contract. A large example here, but a book company turning over 10 million, they actually won a contract for 3.2 million to deliver books to the Far East. For them, it was important because it was widening their distribution. They'd never delivered there before. It was a 2-year contract, but they needed money very much, working capital, to get the whole thing off the ground. They went to the bank. They had a facility with the bank, but it meant that if they used that, they would have used all their facility up, and it would have prevented them from looking for other business in other parts of the world. So the bank then came to us and said, right, okay, would we support this contract? Would we step in with the 80%? We did, and they delivered that contract after the 2 years, which finished about a year ago now. They got a renewal for another 2 to 3 years, and they're very much looking elsewhere to try and build their business as much as they can overseas, and we're very much part of that. Another one which I particularly like, because it demonstrates, hopefully, the level to which we will get involved. These guys, they're educational consultants, but they will go out to developing markets and take with them the whole kit and caboodle to deliver even a GCSE program over a year in that marketplace. Turning over 3.5 million, they got a contract for 3.4 million, which for a company that size was huge, enormous. And they again came to us. The situation was we were able to step in. We provided some bonding. They needed to put down, on the 3.4 million, they had to put down a bond of 340,000 to say they were confident that they could deliver it. Plus they needed working capital. They couldn't afford it themselves. It's a company with only 12 employees, so, tight funding. Came to us. We funded 50% on the bond, 50% on the working capital. That was 2.5 years ago. At the end of that year, they'd moved from 3.5 to 9 million turnover, and they're now heading towards the 14. Exactly the kind of company we like to work with. Final one, or major one, is the export insurance policy. It covers several things. The non-payment risk. So if your customer goes bankrupt, is there no longer. Political risk, if for whatever reason there's disturbance that stops money coming out of the country, to be able to sort your invoices. Or let's say you're shipping goods out and for whatever reason it cannot be landed and it's not your fault, nothing out of regard, then we can get involved in that. And we will cover up to 95%, so quite serious cover. Not always, certain markets it's slightly less, but in the main it's around 90-95%. We work with brokers. On our website there's a whole list of brokers there who know our products. So if you go to them and they can absolutely demonstrate that the private sector is not interested in supporting you because of the market it is, they can come to us and try and find some quotes for you. But as I said earlier, we do not compete with the private sector. We only come in where the private sector will not go. And the other thing is, it's contract specific. As I said before, it's always related to a contract with a country and a customer. Now, if you go to most private credit insurers, they want your whole of book. They'll do all your sales. But if you go with a one-off contract, they're unlikely to do it. We do. I think the smallest contract we've done was £10,000, which is not very large. But as I said before, we've done huge ones into the low billions. And you can come to us direct, but we always suggest go through a broker because it's painless. We give them commission, you get a service, they introduce you to the products better than we can, and that's what they're there for. An example here, these guys, Flexible Springs, they provide springs for aircraft. They had a contract, or had been supplying an Indian company for many years, but on fairly small contracts. They got a contract in for £33,000. Not huge, but for them it was worrying because it's a small company, a small family firm, and they wanted to be sure they get paid. So they came to us, they took out the insurance policy, which they said without it they wouldn't have taken the contract. In fact, at the end of the 6 months, it was paid, all sorted, but they had peace of mind for those 6 months of knowing that after 6 months we would pay up if the customer didn't. And so that was sorted. The second one is slightly different, and it's about, I mentioned the letter of credit earlier, but effectively what happened was this company, they got a contract back in 2011. They won the contract. And it took 2 years to agree with the client exactly what it was they wanted and how it was going to be put together. Effectively, it was storage for mining core samples out in Ethiopia. They agreed the contract. Then they got a letter of credit from the Bank of Ethiopia and they took it to the banks. The banks in the UK didn't like it. Ethiopia to them was not something that was going to happen. So they came to us to see if we could help. It was £130,000. And what we did there was we said, right, okay, to do the letter of credit will actually take quite a while to put in place, but we will give you the export insurance policy, which will cover you for 95%. They took it, very happy with it, it's worked. They've gone out and done another job out there, and they're looking for jobs elsewhere in that part of the world, in North Africa, where they know it's difficult to get credit insurance through the private sector. Bond insurance is very similar process, so it protects you against political disturbance, it protects you against perhaps the person who's got the bond calling it in, which they can, because it's an open bond, so they can call it in. And in that situation, we cover 100% of the value, so you know that your bond is in effect safe, that we're looking after it. Just really a couple of final words about myself and my colleagues. As finance advisors working for the Treasury, our focus is on the products I've just talked about. But in reality, when we're working with small businesses, there's an awful lot of financial needs that will not be met by the banks. So you go to the bank, they're not supportive, and we are here to try and find solutions. So we work with, and we know, and hopefully can effect introductions into alternative finance providers who can work with you, perhaps invoice discounters. There are companies who have been set up in the private sector, but with government funding that we're aware of, that again can support you, that can get, if you like, they can fund you when you're supplying overseas with certain products that they're comfortable with. But we've got all the names and contact details for these people, and hopefully we can work with you. Our job is very much to come out, see you, understand what the need is, and try and help you find the way through that, if you like, that forest problems. Just to summarise, on the bank schemes, there is no fee to you for working with us at all. What happens is, if we take on 80% of the bank, if we guarantee 80% of the bank's risk, the bank pays us 80% of the fee that you would have paid them in any case. If it's 50%, they pay us 50% of the fee. If it's 10%, it's 10%. So there is no additional cost to you whatsoever. When you're doing your arrangement with the bank, they will charge you a setup fee. That's between you and them, and then it's an ongoing fee whilst you're using the service. All we do is take a cut of that, so there's no need for you to worry about additional cost. And in fact, in doing all the setup, one of the things where companies perhaps get involved in making bids for work where they can't be sure they're going to get it, what we always say is come and talk to us early, because if you don't get it, no loss, it costs you nothing to talk to us. If you do get it, at least we're there, we're ready to run as soon as you need it, instead of taking several weeks to get the whole sort of paperwork through. Has to be with the working capital or the bonds, it has to be through the bank. There's no option. Just go to the bank first and then us. But if you are thinking of using us, start talking to the bank early. Get them on board, get them thinking about it, getting them to know that you know what you're talking about, that you've heard of UK Export Finance, because we're still fairly new. Yes, we're talking to the banks, but not everybody in every bank is aware of the service. So if you do that yourself, it helps. And finally, the insurance policies, either to us or through a broker. That's us, really.